podcast. And yeah, let's jump into it. Obviously, you've seen the ads and obviously our story and things like that. And it's obviously resonated because you're here. So, really focusing on tonight is how to pay off your mortgage in under 10 years and use the equity in your home to buy investment properties that generates financial freedom early. So, that's the whole theme of where we're at right now. And obviously, want to get into this first and foremost. So, in order for this to be successful for you, your success can only be achieved by your understanding of which factors will shift your perspective, allow you to take action, and maximize leverage. So these are going to be very common themes that I'm going to be speaking about throughout. Furthermore, on this, just wanted to really kind of talk about the brutal and harsh realities that we're facing at the moment. So, if we're looking at the Australian residential housing market, there is a bucket load of cash here, just shy of $12 trillion. As of a couple of weeks ago. So basically, this notion or thought of idea that housing is going to fall off a cliff is not going to happen because there's just so much money parked into it, government's behind it, and majority of Australians' wealth is behind it as well. So we can see it's bigger than super, bigger than stocks, and then bigger than commercial real estate. So the Australian residential property market is going nowhere, which is great. Now, does property double every 7 to 10 years? You probably hear this very common scenario as well. And what we see is that it's pretty close if we look at it over time. So when our parents bought property and then obviously their parents bought property, it's pretty much been on trend that residential property within Australia is doubling every 7 to 10 years. And if that's going to be predicted going forward, then it's somewhat of a not it's a bleak outlook, I suppose, essentially on that side. So essentially, if we're looking at the median house prices here by 2030, things are going to be increasing, in all capital cities essentially across Australia. So we've really got to look at the harsh realities and brutal truths that this isn't going to be going anywhere, and what can we do now to arm ourselves with the right education and knowledge so that we can get ahead of the curve. Now, if we look at our parents' generation, and they were very much let's just buy one property and pay that off, and that's pretty much how it is. We then also, and they will rely on super. Now, if we look at super and where we're currently at the moment, it's not really going to be enough to get us there. Again, a brutal reality is that our super balances and what we're seeing right now, isn't on trend to where it needs to be for a comfortable retirement. Obviously, our parents, had lower super contributions and those type of things, but it's something that's falling well short and in something that really is a concern right now. So if we look at super, as our retirement option here, and we go off the basis of a medium risk and, from the age of 25, when you most likely get out of university and get a job, to 65, hopefully we can retire by then. A super balances, and we look at those median house prices, is it going to be enough to catch up even with a healthy, salary of 100, 150K? And most likely it probably won't be. Obviously just using this as a scenario here, that super might not be the most effective form. And then if that doesn't work out, then you've got the age pension. And if we look at the age pension, it's not a lot. It's not a great deal at all. So it's pretty much just it's on the poverty line basically. So if we're looking at our financial futures here, relying on the government and the current structures is really not something that is going to be sustainable, or especially with everything increasing, that how this is actually going to work out in the long run. And if we also look here as well, that if super's not working, and then we look at the age pension not being enough, I'm seeing a massive rise of reverse mortgages in my industry, which is a massive, massive concern. And essentially, this is basically where seniors don't have enough money. They might have paid off their home years and years ago, but now they've got to draw back a mortgage and let the equity payments and everything just kind of compound on top just to make ends meet. So, that's a really sad reality that we're seeing. Another part as well is that obviously Australia being a wonderful place to live, it's very good for people wanting to come overseas and live here as well. And we do have a very, very high dense, amount of millionaires coming here, and they've got cash and they want to buy property. So that's also another reality as well, that another pressure that's adding on. That was from 2013. This year is just the most recent one here in 2025. Probably not as strong, but if we look at per capita, like, we're a pretty small country in the scheme of things. That's a lot of money flowing through. And also that's putting, a lot more pressure on the housing market there. So if we're really looking at these brutal realities, we're all starting to wake up now and go, shit, this is not good. Like us having one property or not getting into property, not investing in property, not taking action or wanting to rely on the government, it's not going to work out. And you can see now that, we're starting to wake up and lose sleep about this. And hence why I was so keen to do a webinar like this, so we can make some choices and try and get things on the right track, pay off our home loan early and, or whatever financial security means that is, and get that underway. So yeah, hopefully we can take a lot out tonight to help with that. And that's my role here. We're all probably thinking, how do we do this? What's the best way to get going, and where do we get help from? And there's obviously so many people online. There's so many different tips and tricks and things that you see, but I really want to talk about what's worked for me personally, what I do with my clients, and obviously how we can help you from a professional standpoint. Build that wealth, pay off your home, and obviously even beyond that, if we need to, if we've got the means to do that. So what you generally find is that most people jump online and they want to try the little tips and tricks and everything like that. And there's an absolute bucket load here of trying to do little shortcuts and hacks of how to pay your mortgage off early. And that's all well and good. There's obviously some really good ones here. And if you're thinking about that and that's kind of your thought at the moment, you can sell items around the house, you can use your cashback rewards, you can make additional repayments, you can set up multiple offset accounts, you can round up to the nearest dollar for every transaction, put your tax returns or cash bonuses, all of these type of little things you can put together, to do a little bit, but it ain't going to be paying your mortgage off in 10 years. And all the other webinars and people that do these things out here, they'll obviously hook you in with the 7 to 10 years, but these all little things will help, but they're not going to be the thing that's going to get you to where you need to be if you really want to pay this thing off early and build that financial security. But have a look at those. They're obviously, top 30 reasons there, and I'll send you a copy of this at the end of it as well, if you want to focus on that, and do something in the meantime. Your interest is calculated daily, so every little bit can somewhat help, but we want to look at bigger and better options to sort us out here. And an example here, and this calculator's on my website as well. If you want to play around with this with your own individual scenario, jump on the website, fill this out and have a bit of a look. But if I got a loan of 500K, average interest rate's 5.75, and I'm making my repayments monthly, I could, have 20 grand in savings and, make an additional $200 per month, and that'll shave a little bit off, and that's obviously over a 30-year term, right? So saving 6 years, that's awesome. But if we really want to get, that paid off within 10 years or really build that asset base, we need to be looking at other options here, because worrying about your frequent flyer points or credit card hopping or, rounding up to the nearest dollar, all that stuff takes work and mental space. So if you're going to put that time in, you want to make sure you're getting better rewards from that. Absolutely. So how do we do that? How are we going to get past that point? How do I pay this off in 10 years? Well, pretty much there's 5 steps that I'm going to go through from this point forward. And I'm going to talk about how I teach my clients, how I've done this myself personally, and what we can do in order to get you in the right step to pay this off early. So basically, if we're going to pay our home off early and build wealth, we're looking to leverage your income using equity and your superannuation to multiply your wealth through the power of owning multiple residential investment properties. And then when we use these gains to then pay off your principal place of residence 10 to 20 years early. So basically, compound interest. And Albert Einstein said it the best: compound interest is the eighth wonder of the world. He who understands it earns it, and he who doesn't pays it. And I'd say majority of us in our scenario right now are paying it. And I want to get it to a point now where we understand it, and then we can get on the other side of this and help you earn it rather than continually pay it. And we're going to have a lot of people saying, oh, property market's gone too expensive. And, obviously been savage in the comments that it was easier to do this stuff 9, 10 years ago, whatever it is. Absolutely. But if we're going to have that attitude and we're seeing what's coming, nothing's going to change. But if the best time to buy property was always yesterday, second best time is going to be now. And if we really want to get ahead and build that nest egg, we've got to invest, because all of my clients who go through this, if you're not investing, you're not making money. So when we look at this and we go, as I said, paying off the mortgage faster, doing our little tips and tricks, it's going to get us there. But if we actually look at what we're about to go through, using your equity, investing, consolidating debt later, and then using that to pay it off in the long run, that's really where our money is going to be made to execute this strategy. Now, there are so many people online, there are so many things out there, and I just want to let you know that I've done this myself personally. I've obviously got my portfolio. I'm going to go through that and show you some life examples here. But you don't want to work with people who haven't done this shit before. If they've done it, get on them. How did they do it? What's their strategy? What's their success? What are they willing to share with you to make sure that they're in the trenches with you? Because if they're just out there pushing agreements, they never own property, they don't know what they're doing, or they're trying to sell you some off the plan shit, it's going to end in disaster. So getting yourself with the right team, the right people for your strategy is going to be super important. And I'll go through that a bit later as well. Um, Now, many risks will be associated with investing. We want to mitigate this before you even get started. So we want to get the right strategic advice, make sure you've got the right team around you, and ensure that they're going to be in line with your scenario and using data. In fact, not going off a whim, not making speculations. It's just raw facts and data. And obviously having that history and experience is what you need on your team. So I'm not here to sell you anything. I'm here to fucking build it. I don't want to sell you a dream that's not real. I want to make sure that what we're talking about is something that I've done personally, and I can hand on heart say that that's been done. Regardless if you're coming from me across Australia or wherever you're coming from, all of this stuff here is what I've done personally and what my whole business and everything is all about to make this happen. So, just want to show my first property here, starting out 180,000. I didn't have a home, we didn't have anything like that. I was, just getting started here. So that's my first property. Not obviously the most ideal looking property. Midway through, obviously buying a few smaller properties, and building up that equity. And then obviously here's my, family home, and obviously something I've been very proud to own and be paying off, based on where we are at this point in time. So I'm super passionate about this, and I want to bring a realistic approach. We're not here to fucking, change the world overnight, but we just need to start small. We need to crawl before we can run. We're not going to go out and buy $1 million commercial asset right away. We need to start small, get the fundamentals right, get the team and support, get all the aspects in place, and then see how far we can take this and hopefully pay that home off earlier, or maybe go into bigger and better things. But I'm really passionate about people building their own wealth and having the financial freedom and choices that this brings, because obviously our parents' generation and the current trends of what we're seeing is not going to support us. So the sooner we realize that if we don't make the right choices, the sooner we realize that if we don't do anything now, that we're going to be lambs to a slaughter. And I really don't want to see that to happen. And I'm blessed to have all this knowledge, and I really want to share it tonight. So what I'm going to cover is how you're going to pay your home off in 10 years or less, the tools and contacts that you need to make an informed decision, whichever way you want to go with this, how I can help you in the next 3 to 5 years, minimum get 3 to 5 properties in the next 3 to 5 years. And then also the 5 steps which we'll go through to achieving your success, when you're doing this and being a property investor to get to where we need to go. So this webinar is for educational purposes only. It does not take into account your specific financial needs, and it's not financial advice. Always seek out the advice of a licensed practitioner to help with your specific financial needs and circumstances, and we can always point you in touch with the right direction with these people. And also a little sales pitch at the end of how you can work with myself and the team moving forward. So we look at the property investing landscape as a whole. Properties in Australia, most people cap out at 1 or 2 properties, and generally it's their home, and then they upgrade and hold on to their old property, and they pretty much cap up their borrowing capacity. It's very rare for people to get above 6 investment properties, and usually that's around, not getting the right advice. But it's something now that, building wealth through property is certainly the asset that we can use to pay off our home in 10 years, and something when you've got the right team around you that we can help with. Absolutely. So we're not going to be going into the six stuff right away. We're going to be starting right at the start here of how do we get out of first gear and where we go from this point. And saving and buying your first home, going through this whole process is something that, is a very, very big step and takes a lot to get there. And you've probably got your own home, you've probably gotten some equity, you've got all these things here. And I really want to talk about how we can leverage up, get you to the next level, and really start to have your money work for you, rather than the other way around. So this is a really good way to look at property investing, and it doesn't happen overnight. It's something that's a gradual process, and that compounding interest when it comes in, later on. So it's a bit of a long game, but you want someone who's been in the trenches, who's done this stuff before. So I want to go through some case studies here of some of our clients that we've had. I'll start with Perry. He's a tradie out in Kellyville, New South Wales. He really wanted financial freedom. Came to us, obviously about 5 years ago, and we used a professional buyer's agent with him. He bought 6 properties that were under market value in growth areas, and basically made over $1 million in 4 years while living at home, finishing off his apprenticeship. He's been happy enough to share his results with us, which has been super humbling as well. But basically, buying entry level properties in growth areas, getting a decent rental return so it could help him, cover his costs and everything like that. But essentially, we're just buying basic properties in a basic position. Didn't have a bucket load of cash, didn't have too much, didn't have a leg up or anything like that. Just took action, let the market do the heavy lifting, and has been able to make over $1 million worth of equity. And obviously, his valuations have come in pretty solid. So again, starting small is super crucial here. Next one here is Nicola and Luke. Now, they were living in the Sydney market, saw the brutal truth that, hey, we can't really afford, a couple of $1 million houses here in Rose Bay. Happy to rent. Let's try and just get started with some investment properties. And we start with the rent vesting strategy. And in 6 years, they bought, 5 investment properties. Again, had that good rental return and also really strong capital growth. Now, with AI, they didn't want to share their photos, which is completely fair enough with the technology in the day and age that we live in. But you can see the properties that they bought here have done phenomenally well. 5 properties bought really well, and they've just performed so well. So started small with the resources that they had, accepted the fact that, hey, we need to get in the market here. And now it's really kind of, built up their asset base and built financial freedom for them. They're now obviously looking to purchase, within the Sydney market and use that equity gains that they've got. Maybe they might sell off their portfolio and have that thing nearly outright, depending on what it is. But again, started small, didn't go for the big thing right away, and got things underway. And then finally, we got Danny as well. So Danny works as a oil rigger, basically offshore in WA, making good dollars. Obviously doing fly in, fly out work, and wanted to get started with property. Came to us, and we were able to get him also with a buyer's agent, who was able to assist throughout that process, and has been a very avid investor of wanted to kind of get started, and is now super picking that up and constantly wanting to go again and go again. And obviously himself and a young family having these assets under his belt, has been a massive, massive, calming factor for them. So that gives them more freedom and options in the future. Again, started small, bought properties in 22, 23, 24. So we're really kind of, 2 or 3 years old, and has obviously seen some significant growth here, which is fantastic. And that's really what we want to be doing, is just starting small with what we've got. And then obviously when we get these gains, using them for the future. So who would want to see results like that for themselves? If you do, pop me in the chat bar, please. I would assume that most of you would, if you have tuned into this webinar this evening, that we all want to get same results of that. We all want to get this off the ground and build wealth. Absolutely.
Yeah, give us to me in the chat bar if you'd like to know how you can get results like that. Pretty impressive, Justin.
It's good to see, mate. Absolutely. I'm very humbled to be part of these people's journey, and they've trusted with this, they're investing with us to get where they need to be. And so you're probably thinking, well, why the fuck should I listen to you? Why, what can you bring to the table? You're probably like every other flog that's online doing a webinar. What's different? And what are you different as a broker? So I think we've done a pretty good job of what we do. We've had a couple of awards come through. We've had over 2,000 property purchases settled, 1,500 refis have been settled. I've been involved with over $1 billion worth of property purchases. And, they're obviously just 3 clients that I've shown. We've probably had about 50, probably just a tad over 50, when I was looking at these numbers that have made, over $1 million worth of equity, which could easily pay off your owner occupied. And obviously AFG top mortgage broker in New South Wales there. On the personal side, property portfolio consisting of 22 properties. So I have gone through 32 transactions, and I decided to sell 10 properties off so I could pay off my owner occupied home. And now I'm obviously still actively buying in Melbourne. So I wanted to basically show you now, a snippet of my portfolio of the kind of buying and selling and the type of properties that I've looked at as well, and then how we get to the other side. You'll probably see my melon online from the ad, which is great. Maybe a few little articles here and there, and obviously some of the partners that we work with. But at the end of the day, I'm just a regular bloke with family, married, 2 kids, and really wanted to build a better life for them and obviously for myself as well. And now I'm very humbled that I've been able to see success from property in the business, and I really just want to give back and help as many people as I can, along the way. So happy to share all these numbers, facts, figures, the properties that I've gone through, so that the areas that I did buy, and really about the strategy that happened here. Now that I don't own them anymore, I'm happy to share the addresses. So bought property for 212, sold for 365. It's now worth 395. And I just want to show you that property prices are still increasing here. This one here, obviously a small gain, probably sold it well and truly way before the boom, but no one has a crystal ball in this game. I thought it was a good idea to sell at the time. Looking back at that valuation, probably think otherwise. And we all make mistakes. No one's going to be perfect at this, but it's all about the fundamentals here. Bought for 390, sold for 700. Now it's worth 790 if I had sold that. Bought for 176. Less than 2 years, it's sold for 350, so it's doubled. Look how much it's worth now if I had held on to it. Me thinking that the Queensland market was probably going to slow down and, peak out for a little bit, based on trends, in my opinion, it's obviously now I've been able to use that cash and equity. But in terms of where we sit, the property prices keep going up. And if we look here as well, with these recent sales, again, they're pretty much in line with the market, but it's just doing the basics of buying properties, existing properties that are small, letting the markets do the heavy lifting. And again, these have only been a couple of years. This hasn't even been 10 years. This has been 4 or 5 years, which the results have been fantastic. And really, areas of Queensland here at the moment, my most recent sale, which was only last month, this one here, I wasn't expecting, I was going to let it go for 380, ended up selling for 460. So it's crazy that property market's going up, it's not going anywhere, and people are willing to pay overs right now. So we really need to make sure that we've got everything in line that we can. And what I really want to show here is, these are the addresses, these are the numbers, the figures. There's no fluff, there's no bullshit. These are the results that I've had from these properties, and this is what's allowed me to essentially pay off my principal place of residence. So have a look at those addresses. Remember Woodridge for when we come up to, and those Logan areas, some of these areas that got a bad rap, but for a little bit later on in this slide, make note of those addresses there. So a lot of these properties were affordable, basic, nothing flash, but were foundations of building the portfolio and things that we really focus on when getting started. So now that you've kind of seen who I am, hopefully that gives you that credibility and trust that we're here to talk about it. I really wanted to talk about this 5-step process of how we're going to get you from where we are now to looking to pay off our owner occupied in 10 years or beyond. So the first one here is really going to be setting the strategy. And, we really need to look in the next 3 to 5 years. Okay. So paying off our home early is obviously why we're here, but why are we doing that? Is it to get a better lifestyle? Do you want to start a business? Is it building an asset base? Do you want to do investing after you pay off your owner occupied? What are the key things there? And like just in the chat, if you guys want to pop in, your goals or reasons why you want to pay off your owner occupied or your goals, please pop them in the chat. Absolutely. If we're going to be looking at doing these things, we really need to open up our horizons to other investing options. We can't just invest in our own backyard, or we can't buy, something that's way out of our price range. A lot of our budgets aren't going to be affording, a couple of $1 million in Sydney. So we've got to look at what can we invest in with what we've got. And so if we look outside our own backyard or interstate or other areas, that's where we're going to see some opportunities which we can capitalize on. And that first property that I bought, I never actually saw it. I just knew that was the data was saying that, and I was advised that, hey, you've got to buy this as the place to start. And I really want to have an open mind to this, guys. Is really the biggest thing here that I want most people to have, is having an open mind to this. And the accumulation of multiple properties. We can buy one property and that's it. That's great. But in order for us to really build on this and get to our goals, we're going to need to get multiple properties. We're going to have to roll up our sleeves, get our hands dirty, and let the markets do the heavy lifting for us. Absolutely. The other part too is how far are you willing to push your limits? So that's obviously a personal one, and so maybe have a chat with your partner, whatever stage you are in life. You might have no liabilities and ready to go gung ho, or you might have a couple of kids and things might be a little bit different, and we have to take more of a conservative approach. So I think it's definitely realistic to still pay your home off in under 10 years with both sides of the coin. It's just what parameters have we got there? What are our non-negotiables? And also the sacrifice as well. If we're really serious about this and we're eating out and going out all the time and all these type of things and spending our money on shit, what are we willing to kind of sacrifice or adjust in order to make this a reality? And then we need to look at setbacks. Property investing sounds all well and good, but that's 9 years worth of shit. It's obviously exciting seeing the results, but you've got to have the right team around you, and you've also got to have like a good mental space as well. And that's something that I wish I had me. I wish I had someone talking to me on a webinar like this when I was getting started, so I could be prepared that there might be setbacks, and I'm not just going to sell, right away. Push through those things and obviously get the results. Hot water system might go, tenant moves out, all those type of things. How we deal with setbacks is a huge one, and something that doesn't really get spoken about a lot in this space is your mental space when you're investing. And how can you increase your income as well is a huge one. Obviously, income's going up, interest rates have gone up, etc., etc. In order for us to do this, we are going to need an income, and we're going to need to have pretty decent bond. We'll work out borrowing capacity as far as we can, but a decent borrowing capacity will always help. But how far can we do this? And are there opportunities here to increase your income, which is something that we would focus on with you. Now, another thing here as well is step 2, which is going to be identifying the properties where there is a clear supply and demand issue. So we know the goal. We want to go ahead. We want to buy property. We want to get started. We want to pay that home off in 10 years. How am I going to do it? It's going to be investing in property. So now I'm going to really talk about how property investment works. What are the key things that you look at? And as kind of stated before, we've got that supply and demand issue. Too many people, not enough houses, obviously all the external factors and things like that. We can't build homes quick enough, and obviously things are just going to get more and more expensive unless someone comes in and changes that up. But key thing here is property investing is about time in the market, not timing the market. So for all the people that thought property was going to go down in COVID, all these different things, it's going to start, world's going to end, whatever it is, it just doesn't happen. And the Australian property market has just been so resilient. And if you're going to quabble over, say, $200 or $500 or $1,000 with a seller, you might miss a really, really good opportunity here. So don't try and say, oh, I'll wait for the next one to come up, because it doesn't happen. The market is waiting for no one, and it is moving at a rapid pace. So I just really want you to know that having the right team around you in this sense is going to be super important. So again, back to this here about median house prices. If we look at where this is, it has pretty much doubled every 10 years for the past 40 years, thereabouts. And that obviously is still increasing from what we saw as well. So just bear that in mind, when we look at this. Now, you may or may not have heard of property clocks and how that basically works, but essentially you have a clock where market peak, when you hear that, the news is reporting things are going absolutely gangbusters, you probably missed the boat because it's at its peak where it's been performing. And usually you buy in the areas where it's pessimistic when people say, oh, that's a shithole, nothing's happened there, nothing's happened for 5, 6 years. I've had a property there, it's done absolutely nothing, etc., etc. Buy when others are fearful, and buy when others are fearful, and sell when others are greedy. That type of line. So, if we look at that here of what are the kind of things you see on the property clock, you'll start with, okay, things are going absolute gangbusters. We're at the top of the cycle. Then things start to fall because there's an oversupply because a lot of people are building in these areas to cash in. Then you see the downturn. Oh shit, this area is not too good. The activity gets low. Construction's not actually happening. Real estate might come down a little bit or flatline for a bit. And then that's really where you want to be saying, hey, we should probably start looking at these areas because they're going to start to come back up again with rising rental returns as an undersupply. People get confident, rising volume, and then the construction comes back up again. And this cycle has happened all across Australia pretty much since we've been recording data. So when you're working with a professional, they'll obviously go through this in more detail, but that's the kind of aim of the game here. And back to that kind of, optimistic and pessimistic there. So when we look at this, when we're buying property, there might be people that held property here in Perth for, 8 years or something, and then bang, it's gone absolutely bananas. It's nearly doubled, right? And that still falls in line with this, average 7%, compounding per year. But you find that a lot of markets will be flat, have a huge boom, then they'll chill out for a bit, and then there's kind of another boom after that. So where we really want to be buying properties to get the results that we need to pay our home off in 10 years is buying stuff here. We don't want to buy here when the news is already all over and says, yeah, it's doing fantastically well, because then it's going to do fuck all. And then you're going to go, well, what am I actually doing here? Why am I wasting my time? Why did I go through that? So you've really got to go through these areas. And it will feel a little bit contrary when the news isn't reporting on it, but you have someone professionally in your ear saying you should buy there. So again, you really want to be focusing on this here and getting the right team around you to ensure that we can get those returns that we need. And once we start to see that, we then go, maybe paying off or doing my credit cards or point hopping or whatever probably isn't the way to go. Rather than putting those extra payments in, I should be putting it into investing, because that's going to increase a lot more in value than having my money locked up in the owner occupied property. So key things you're looking at when you're looking at these markets of what's going on in the area, it's what's projected growth, what's the migration numbers, what's the government spending on projects down there, the micro and metro factors as well. Sorry, micro and macro factors, your amenities, so schools, shopping centers, hospitals, train lines. What's happening in those areas that's going to be bringing a buzz, and also that sustainability. Owner occupier appeal is definitely one as well. If you've got obviously 3-bedroom houses and townhouses and houses, might obviously have more of that emotional buyer that might want to look at that. But also areas that are gentrifying with one bedders can be really good as well. So your professional advisors will tell you about that. And you do want to be around all of these things that are sustainable. So we are generally saying 1 hour within a CBD, nothing further than that, because then that might be considered regional. So you want to be in these areas that are growing and have that sustainability. And you want to be making sure that these decisions that you're making are informed by people that are professionals around you that are giving you the right advice, or you're getting your data from the right place. Now, here's a really interesting one here, is that as I mentioned before, Woodridge, I didn't realize that Woodridge was going to be something that had the fastest growth in the last 5 years, where that market went so well, hence my property portfolio went gangbusters and things doubled. No one would have predicted that. But if you look at all these areas, they're all in affordable suburbs. We're not seeing Bondi's, we're not seeing all these, crazy areas. You're seeing areas here that are more in your lower socioeconomic areas that might have had a bad rap. So these are the areas that are showing that growth and also that sustainability. So with the gentrification coming through, these are really affordable stepping stones that you can get into to purchase a property, get the results that you need to help grow that asset base, especially when we're getting started. So looking at those units or houses, it doesn't matter. I would rather have, I'm so, grateful that I was able to get, these properties here in Logan that went up, 148%. Rather than houses. I don't really have too many houses in my portfolio. They're all basic, very entry level stuff that's, allowed us to be where we are today. So it's these type of things. You don't have to have houses where everyone says there's got to be 600 square land and development potential and all that shit. Yes, you can do that, but it's a lot more expensive. And if you can get started at a lot less, just to get your foot in the door and then get those equity gains, and you can look at that stuff later on. Now, if we look at this picture right now, that Perth is still looking, it's going to, this is based from Westpac's research, which only came out about 2 months ago. They're saying by 2026 that Melbourne is shaping up as the comeback city for double digit growth. And these prices aren't going anywhere. They're all going up. So the longer we leave this, and if we don't take any action, the more this is going to cost. And that seeing all of this stuff coming out with all broker stuff and people that I work with and everything, it's just like, fuck, we've got to do something because it's going to get away on you. And again, you don't have to do it. That's totally fine. You be here for education. That's cool. But the longer you leave it, most likely the more you're going to be paying. And from this, Melbourne is shaping up to be the area of the comeback kid because it has been a pretty flat market through COVID. It hasn't done too much. And now that areas of Sydney, Sydney, Brisbane, Perth, Adelaide, they've all increased, that Melbourne's actually, somewhat cheaper than them in those areas. And people are like, oh shit, it's actually really good value now. So, we really need to look at these property cycles, where they're at on the clock, and and obviously seeing where things are going. And at the moment, there's an opportunity there we're seeing in Melbourne. So we've got our goal. We want to pay our home off. We want to get in there. We want to look at investment properties. How do we do this? How do we buy investment properties? What's the next steps here? And your finance is probably 99% of most people need the bank's money to get this underway. So to make it simple and some easy things to go through, there's 5 kind of key areas I'm going to touch on here within step number 3. It's cash, guarantor, equity release, potentially looking at your self-managed super fund, and obviously getting the bank's money as well. So cash, how much do we need? Ideally, if we can use our equity in our home, that's great. If we don't have any equity in our home, if we could use 100K, that'd be nice, but we can get in for less than that. We can get in with 5 or 10% deposits. We can use equity to do that, which is awesome. Obviously, the banks, they want you to do a 20% deposit, and that's where your flashy interest rates come in. But if we can get in with a smaller amount, 50, 60, 100 grand, that's definitely something we can look at here. If we didn't have cash available, then we can look at a guarantor. Now, if you already have a property and you've got equity, we can use that. But if your parents are willing to help you get in there because they're like, oh shit, we've just realized we've gone through our whole life and we haven't been able to do that or invest, or we've paid our owner occupied home, they can use their property as security guarantee for you to get into another property, which is another really cool thing as well. So using a guarantor, you don't really need any cash down. You're obviously going to get 100% loan for that purchase, but it gets you into another property, which could help obviously grow your wealth base here. So here's just a quick example of how this works. Basically 20% guarantee. So if you bought a property for 500K, 100K guarantee comes from them. When this property increases in value to 600, 650, whatever it might be, then we can look to unsecuritize your parents. You've made the equity on the way in, no cash actually changed hands. So a really powerful one if you've got it available. But what we probably want to focus on here is that if you're a homeowner and you've got equity in your home and doing nothing for you, then releasing it and then using that to go and buy investment properties is going to be super important. So if we have a look at this here, if you have a property, let's say it's worth 800K, and you've got 500K owing on that property, there's 300K worth of equity in this property. Now, most of the banks are only going to let you go to 80% of this. So let's just use the example of 100K worth of equity. And we use that 100K worth of equity to do your deposit, your closing costs, everything like that you buy in investment property. And then that property goes up 200K. That's the equity. That's why we're doing this whole thing, is to get the equity growth and buying these properties in the right area. Once that increases in equity, then you're using that and leverage off into the next one, and so on and so forth. So equity is such a powerful tool. And if you're a homeowner, you could be sitting on some real gold here, and it's something that we need to unlock and is going to be the key for actually you going ahead and wanting to pay your home off earlier. It does sound a little bit backwards that I've got to get in more debt and do all these different bits and bobs to get there, but these are really the things that it's such a golden ticket, if you've got it available to use to get money to go ahead and invest. Now, the valuation of your property, which is going to be super important, really varies from lender to lender. And I just put these in today just to show you an example of some clients that I'm working with. Bought their property 770. The valuations, who's going to go to 40 different banks? You're probably not going to go and do that and say, hey, Mr. Banker, can you order this valuation for me? This is really where a value of a broker really shines in what we do day in, day out. You can see that the valuations, if he had gone to ING, there's $1 million, but if he had gone to NAB, it's 850. So that's 150 grand difference that could have been tucked away. That's difference maybe we're getting 1 or 2 properties just by which bank do you choose, you know what I mean? So that's the same here as well with other properties too, that banks will have different ways that they value properties, and that's really the difference in some cases of you buying a property or not, or getting multiple properties or not, to accelerate this quicker. So having a mortgage broker on your team is going to be super, super important. So speaking with a broker, talking about the goals, if you want to pay off the home, whatever it is, whatever our scenario it is, you want to work out those numbers, talk about the structures we can make this happen. If we can do the refi cash out and get you moving and take action, that's what this webinar is all about. And this is what my business and my whole aim is to get you to take action to do this. Now, if you don't have a broker, obviously use us. Got my team here. Everyone's details here. Just a bit of a shameless plug. But obviously, when we're buying property, there are going to be costs involved associated. So, when you are purchasing property and we're getting equity out and doing all these type of things, there can be different, aspects that we need to take into consideration here. Not all of these are going to be applicable. Obviously, stamp duty will be, not so much valuations and legal. Yes, that will be there, but your professional costs as well. And I'll talk about that a little bit later. But some of these professional costs can really determine whether you do this successfully or we get this out and it's a complete, somewhat waste of time if we don't do it properly. Now, another side thing, as I mentioned, is your self-managed super fund. You can look at doing that as well. You need about 100K minimum. And it could be an option to look at as well, that if you've got 70 grand super and your partner's got 50 grand super, that's 120K super that you could use to potentially go ahead. Now, there's obviously a bit more red tape, it's a pain in the ass, and then a bit more compliance you need to go through with ASIC and the ATO. But again, we've got the team around here to get through that and make it as easy as possible. So it's helping growing your base and working towards your goals of paying off your home early and building your wealth base. So we can also look at that too. Now, when you're speaking with a broker, every scenario is going to be different. And you can see based on these incomes that yes, there's salaries here. Yes, the rates are good, but look at the lending capacity difference. You've got some that won't give you money and you've got others that are over here. So again, you're not going to go out to 30, 40 different banks and waste your time doing this. This is really why, brokers are doing 78% of loans right now, is because of the value that we bring and the choices that we can provide. And it's not always about the interest rate. In this instance, it's more about how much can they let you borrow? What's their valuation? What are they bringing to the table? And we need to strategically utilize these lenders to meet your goals and objectives at the end of the day. And if we want to pay off that home early or build a wealth base, this is such a critical part. And again, these are just people who are PAYG scenario, but then also we have people who are self-employed, and self-employed people get treated very, very differently. And there's a lot of, different ways we can skin a cat to look at scenarios here. So, such a varying amount of lending capacity here. So I cannot stress how important it is to get a broker on your team, because if you just walk straight into a bank, it's just one set of policies, yes, no. With 30, 40 different options here, there could be 30, 40 different outcomes for you reaching, your goals and paying that home off early. So again, you need to get that team around you and getting professional guidance and a mentor. Now, look, obviously I'm a broker and focus very heavily on the finance side, but I've been through this process before and I'm living proof at the age of, just 33 that, we can do this, it can be done. And we don't need huge amounts of cash. We don't need all that type of stuff. We just essentially need to get started. This can be very overwhelming as well. And luckily for me, I've been in this space and been able to learn so much along the way that if you're doing this on your own, it can be really, really stressful. And the analysis paralysis is totally a thing. When you're looking at all this type of stuff and risks and so on and so forth, it's very, very real that you'll just listen to too many podcasts, read too many books, and actually do nothing. And then this scenario gets away. So if I can empower you or educate you tonight to take action, that's really what this is all about. So when you are looking at purchasing these properties, you don't want to get this wrong. You want to make sure you've got the right economic conditions. You've got people looking over the right legislations, because what's happening in New South Wales is not the same that's happening in Victoria. You want to know what's happening in these local areas and get all the research in you can of where you do, buy a property, because their value is going to be, determined a lot by those external factors of what's happening in the areas, and everything like that. So getting someone on your team who is in the area, that knows this, that is an avid investor themselves, that knows all this type of stuff, is going to be super, super crucial to your success. And I cannot stress that enough, because if I didn't have professional advice, I wouldn't be able to do this and I wouldn't be able to share it and I wouldn't have the results that I have. I just want to give an example here as well of a professional advice too, that, this is properties that I'm holding of the 22 that are in my portfolio, that, bought this property here. This one's in Perth, bought for 2.5 years ago for 330. I've done nothing to the property. Perth's gone nuts. 595 basically is a valuation on that. So it has increased 265K in 2.5 years. And I wouldn't have known that. I wouldn't have been say, yep, that looks great. It's a very basic, property there, which I was like, oh, do I really need to buy this? But it's an investment. It's an investment. It's not an emotional decision like our owner occupied properties are. it's got to be about the numbers, and the numbers have certainly performed here, well above expectations. Absolutely. And the second one here as well, there's another one down in Melbourne that bought for 355. I've had that for just over 9 months, and coming in at 435. So you can see that the growth of these assets, getting a professional on the team is really going to make this worthwhile, so that you're getting the results that you need to get to where you need to get to. So if you haven't got someone on your team, and I can also put you in touch with this guy, I don't give a shit who you use, but you need someone who is in the trenches with you that has done this. Obviously, Eddie has been a very instrumental part of my success, and someone who's been able to help, along the way, and help clients that we work with. But I would say that really what we need to focus on is getting a professional team around you is super important. And a buyer's agent finding the right properties is definitely going to help. Now, the value between all that type of stuff and what we do, and obviously the ins and outs and everything like that, is super important. So really, if you don't have a team around you and you want to do this yourself, there's a high chance you might shoot yourself in the foot. So I would highly recommend that you seek out professional help where you can. We can use us, or whoever you've got. Just make sure you're checking them out, making sure that they're giving you the right strategy, that they've done this before. Ask them, how many properties do you own? What are their goals and dreams? Have they paid their home off early? Are they investing in property? Do they set up a self-managed super fund? All these different things are going to be super important. So, these are the things here that when you're building your strategy, you've got to make sure it's a good one, and you've got to execute on it, because we can go round and round in circles and I can tell you all of this, but if we actually don't fucking do anything about it, then what are we doing? Like, we need to really make sure that we're on track to hitting these goals of building wealth, financial freedom, paying off the home, whatever those long-term goals are. Absolutely. So, buying in the right location is a must. That is the number one most important thing. You'll hear people talking about depreciation and negative gearing and all this type of stuff, and it's in this type of suburb and blah 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 blah, etc. You've got to look at the data, and it's got to be in an area that is growing, because there's no point buying a 4-bedroom house out in Broken Hill for 300 grand and it's worth 350 in 5 years' time. You'd rather buy a one bedder in Melbourne that's worth 250, and then it doubles to 500. That's really what we're chasing, what we're doing about this. So getting all of that data and information, either yourself or a professional to do it, is very important. Buying below market value is obviously a bonus. If you can get it at a discount, deceased, sale, death, divorce, whatever it is, that's obviously going to help, with you getting those gains. And a strong rental return to help cover everything is always going to help too. And if we can get you a good interest rate, even better. But it's not the be all and end all. It's how many properties can we get that go up in value, and the market does the heavy lifting for you. So again, same thing, back to this same one again. I'd rather buy a one bedder in Logan that went up 148%, or bought, out in Armadale in Perth that went up 178%, rather than that 4-bedroom house that did, bugger all, only went up 100 grand, something like that. So really focusing that your asset selection in the right area is so important. You can have the worst property in the best suburb. That's really what we're focusing on. And finding all this information can be very, very difficult. Now, let's think about this. If you had done this 3 years ago, did on your own, you probably made 100 grand conservatively, if we're just going off that, 7% compounding growth. But if you had done this with a professional 3 years ago and saw the growth and numbers that we had there, and they were pushing you and helping you along, you probably would have been $1 million better off right now. And depending on the owner occupied property, you might have even somewhat paid that off, or had a very big chunk of it gone. So I don't want to see more people miss this opportunity, because it can be right there in front of us when we've got the right team around you. So getting that right team is super, super crucial. Now, this is a big one where people buy one property and they go, yeah, it's awesome. It went up in value once. And then they don't do anything. We're not going to pay off our property just by, our owner occupied property just by getting one. Unfortunately, we've got to get multiple, and that the markets do that heavy lifting and use this as leverage to go on to the next steps. So if we look at this, that if you bought a property here for 350,000, and we're just being conservative here at only 5%, not the national average of say your 7%, and we hold that for 20 years, that property would go up to about 930K, over the next 20 years, which is great, right? But we want to pay our home off sooner than that. So we're going to need to get a few of these things if we want to get to that goal. If we focus on building that portfolio, say from, a $2 million portfolio up to say about $5 million, the growth of how this is determined is the equity. The equity that grows over time is going to determine your success. And that's the key thing of leverage here. We have to go one property to the next, to the next, to the next. Now, we might need 3 properties, we might need 5, we might need 10. Depends on the size of your owner occupied, depends on what your goal is. all that type of stuff. But the more assets you can get under your belt, the more you're going to have options here moving forward. In the first period of owning your property portfolio, you're pretty much paying interest to the bank. So all of these little hacks and things like that we're doing, we can do that, but we're really not making a dent in a 30-year mortgage right off the bat. It's not until we get later on down the piece that you'll notice that your mortgage is a lot more principal. So rather than just putting that money in there trying to pay it down, we are better off, statistically looking at getting that cash and putting it into investing or using that equity. So if we had just done the normal standard thing of 500k, put it in the capital appreciation 6-7% after we made 130 grand in 4 years, like that's not going to be enough for us to get started there. And that's a very common scenario that we see. The people will do that, get their equity out, just buy stuff in their local area that's going up. They're not looking outside in their own backyard. And, if we're looking at that first property at 500, we might be tapping out our lending and borrowing capacities, relatively quick here. And so we really want to, how do we keep going to property number 3, number 4, number 5 to keep this going to go into the next investment? So in this chat, who would like to in the next 4 years to get 5 properties that are going at only 6% per year? Put it in the chat what your answer would be on that one. I'm hoping no one answers that. I'm hoping that no one answers that, because that is a trick question. 5 or 6% is not going to be enough to get us to where we need to be. That is a very average way what most people are doing. If we want to be paying our home off in 10 years, we need to get higher returns in a much shorter space of time. And we need to act on that by buying properties and getting on that are going to be going at a higher valuation than that. So getting that professional team around you to buy properties that I discussed previously is really what we want to be focusing on, rather than just doing what's average. Now, when we build this portfolio, the money in how we pay off our home is obviously going to come later once we sell these assets off, once they have performed. So right now we're focusing on the acquisition phase, and we need to hold the assets and let that portfolio do what it's doing. And then we focus on cashing out on the way out when we go. So let's just use this scenario here that we bought 10 properties with an average of 350k. And I know 10 properties is a lot. Don't get me wrong. I completely understand that it's not, we're going to do this right away. But if we work towards this and we held these properties for a 10-year period, and then they doubled, we didn't do too much. We didn't pay off any debt. We didn't do anything crazy. We just held the properties and let the market do the heavy lifting. Our portfolio has gone from 3.5 mil to 7 mil. Okay. Now, when we go, shit, what do we do? These properties perform so well. Where do we go with this? We're just focusing on building that nest egg so that we can get it to a point where we can pay off the owner rock or keep investing down the track. So you will probably get stuck at a choice. If you start on this investing journey and you're building out your portfolio, you're going, this is really good. This is working really well for me. Depending on your scenario, how far you can push it, you might be able to get to this point. You may need to sell some properties off to keep going, whatever it is. But there is kind of a point you'll get to when you've had the results from this, foundation portfolio. What do I do? Am I buying more residential? Am I buying a commercial property? Am I consolidating debt? Am I paying the principal place off? And these are the things when you've got a professional around you and your goals are obviously being there too, we can work through this to determine, okay, what's going to be the best. But we're going to go, of the sake of this webinar, is we want to focus on the principal place of residence here. So if I've built up 10 properties at average of 350k, and if we're looking at the growth kind of per annum here, and this is over a 10-year period, that if I'm going to sell these properties off, or I'm going to sell some of them, how much profit am I left with after doing it after a 10-year period? Now, working with a buyer's agent, you might get these results quicker. You might get a higher return in a short space of time, which is really what we're chasing. But just wanted to kind of be conservative here when using these numbers on what's the best way for us to look at this scenario, how we're actually going to pay our property off. As you can see here, that yes, we are going to have to pay tax. Everyone talks about this, but when you do hold a property for more than 12 months, there is the capital gains discount that comes in. So if we look at this now, we're going to pay off the principal place of residence. This is where we start to cash out. If that market has performed, it's hit the property cycle, it's at its peak. This is the time where it's like, okay, well, it might be flat for the next 5 years. Am I going to start to look at, cashing out of some of these properties and paying off that owner occupied property? So if I cash out of 5 properties as an example, and my portfolio has doubled, am I going to get, 5 lots of 250k? And is that enough for me to pay off my owner occupied home? Do I only need to sell 2 or 3 off? Do I need to sell all of them off, pay off the owner occupied? But we won't be in this position if we don't take action and buy properties in growing markets to pay off the owner occupied. Now, yes, there are going to be selling costs. Yes, that is just the cost of doing business. You'll have your agents' commissions, 1.5 to 3%. Marketing, 5 to 10K, depending on how far you want to push it. You've got your conveyancing fees, and then you might need any repairs and stuff that you've got to do. So, yes, there are going to be costs on the way out. But again, you're buying the property and how capital gains is worked out is we're obviously going to have the sale price. So if you had it for 700,000, you bought it for 350, and then obviously you probably had your cost there. Let's just call it 50 grand. So then we've got a capital gain of 300K, and then we're going to actually get 50% of that essentially tax free, which is one of the most generous in the world. Where in Australia you can basically have 50% after 12 months, right? So it's a very, very generous concession. Yes, you do need to have to pay tax on that, and let's just assume that you're in the highest tax bracket of the 45 cents in a dollar, right? So hence why we've just put this here in this to make that more understanding of, yes, we're going to have to pay tax along the way, but that net gain that we walk away with is going to be crucial to paying off that owner occupied property. So if we were to sell it within 12 months, then obviously you're going to pay full rate of tax, but after 12 months there's that discount there, and obviously benefit of holding an investment property. So if we go ahead with that and we decide, all right, I've sold 4 properties and I've got 800 grand, 700 grand, 500 grand, $1 million, whatever it is, we're then using that to pay off the owner occupied. And after now doing that, and it's obviously been a journey, something that most people wouldn't think of doing that at the age of 33. What does that bring to you? And that's obviously a very subjective question of don't need me to all Gandhi up in here, but like, it's going to be different to the individual, right? You're going to have different goals, different stage of life, kids, you might want to invest, might be freedom, might be pissing off overseas, might be traveling, might doing whatever it is, right? And it's going to be coming down to the individual and what it means to you. But if you've been able to invest to then pay off your owner occupied, it then is going to free you up for bigger and better things. Or you keep investing and you go into bigger and better things. But at the end of the day, when you invest, you're going to have these options that we see. And I've obviously been living proof of that as well. So we're now at a crossroads. Obviously, I've been talking here for about an hour and sharing my story and everything like that, and try to give as much insight as what I can about this scenario for you, and how you can apply this to your own. And so there's 2 options here that are really going to stand in front of you. We can do the same shit. We can follow our old ways. We can follow our parents and go through exactly what's done. And we can not take action and go, yep, he's just another bloke that's on a webinar. Yep, sweet, whatever, got a few dot points. Or we're actually going to fucking do something. Are we actually going to go, all right, I'm going to have a crack now. We're going to make this happen. And I don't give a fuck if you come with me. You don't have to go with me. But you got to act and do something. You know what I mean? Speak to a professional about getting out of first gear so we can make this happen. And that's the 5-step process that I'm so passionate about and really want to help as many people, make that happen for their dreams and scenario. I would love to see as many people get into the 1% investors. I'd love to see people to, start to build their portfolios and, build real wealth for their family, because it's something that's just slipping away and it's getting eaten up, So you don't want to be missing opportunities like this that have been recorded, and, we're missing out on opportunities. So super, super passionate about that. So where do we go from here? How can we make this happen? Well, I'm now offering basically breakthrough sessions where I want to sit down with you one-on-one. And basically I'm so passionate in this that if I can't help you, I'll give you money back. But I want to speak to people who are seriously keen to get moving and build a better life for themselves and their family, or pay off their own rock. So usually I charge $1,500 for these. Basically, I'm going to do them for $997. You can scan these links and I'll send these to you as well. But basically, if you scan there, you pop in the PFS 500, take the payment of 997, and basically my team and I will reach out tomorrow and we'll arrange a time we can sit down. I'd recommend to have your partner, anyone else who's keen on this, who really wants to take that next step and move forward with their investing, because there's so much out there, and I hope that we can actually move something here for you. And I wish I had me, when I was starting out, to give me the guidance or the kick in the ass, or get, the right team around me so we can actually do this, so we don't miss opportunities. And for the knowledge that I've got here, like, I think that it's an absolute steal for me personally. Obviously, I'm selling myself here, but for me to sit down and do all that stuff with you, I would wish that someone had done that with me. And if I can't help you, I'll give you your money back straight away. At least we actually had a crack at it. But what I really want to go through in those sessions is, how you're going to establish yourself financially. How do we qualify for the loans that we need to get our portfolio underway? Utilizing the insights that I've learned along the way, how we can implement that in yours. Get you with the right team of professionals. If you don't have the right accountant, financial advisor, mortgage broker, etc., how do we get them in front of you? How do we get the buyer's agents there? and ensuring that you're taking action as well and keeping you accountable, because this is a long-term journey. It's all about relationships. It's not just one property and see you later, because that's not going to get you to where you need to be. It's going to be multiple check-ins, and it could be a few times a year, could be even more than that, that we go through this and review your scenario. And we want to do this as efficiently as possible, continue expanding your portfolio, and keep you on track to your goals. That's the number one thing. If you want to pay your home off early, we've got to do that. I've also got a PFS wealth tracking app, so you can track all your income, assets, and everything like that as well, keep you on track. And it'll actually give me access so I can look at it with you, with your reports, and make sure that's on track so that we're building this together. And I'm going to give you access to my buyer's agent, my accountant, everyone else, my property managers, obviously brokers that I'm working with, accountants, solicitors, everyone that you need in your corner to make this happen, who's helped make it happen for me. I'll give you all their details and do introductions and whatever you need. And obviously with my broker business here, valuations, portfolio reviews, and doing the repricing and the liaising with all of my professional contacts here. So who wants to be someone who's got the outcomes like that? Who wants to join this? If you're keen, if you're fucking seriously ready to make this happen,